These are real housing market trends that expert investors are using to improve their portfolios in today's market. Because the headlines can tell you some things, but there's no substitute for the insight you get from talking to people with boots on the ground, making deals happen right now. So that's what we're bringing you today on the Market. I'm Dave Meyer, joined by our expert panel, Kathy Fettke, James Dainard, and Henry Washington. Today, we'll break down 4 key trends in the real estate market backed up by real-world experience. We're going to talk about new construction opportunities penciling better than a lot of other strategies, off-market leads becoming more common, properties only selling when they're priced right, and cash flow actually becoming more available even for stabilized properties. This is On the Market. Let's get started. Good to see you all. Kathy, how's it going?
So good. Good to see you all too.
Thank you for being here. How are you, James?
I'm doing good. Just trying to grind through this market.
And you're giving off major summer vibes right now. You just look relaxed and tan.
I always wake up full of zen, and then I read my emails and I see all the issues going on at job sites, and it goes away immediately.
So the zen lasts 45 seconds.
It's like for parents when your kids are going crazy and then you put them in the car and then there's a 10-second walk from their side of the car to the driver's side.
That's your moment for the day, Henry.
Yeah, then you get back in the car and you get back to it.
Exactly.
Well, I'd ask you how you are, but now we know how you're doing. Based on that being the best part of your day, we know what's going on in your life. So, Henry, I'm going to start with you because you're having such a peaceful morning. I'm going to pick on you first. What is one trend that you're seeing in your market, in your portfolio, that you think our audience should know about?
One trend I'm seeing, not just in my market, but really nationwide, is a lot of investors pivoting from fix and flip over to new construction, either build to rent or build to sell. And I think that that's a product of the interest rates making cash flow difficult and a product of prices still being, air quotes, high. And so cash flow is hard to get. But a lot of people are able to build for a reasonable price per square foot still in most markets. And there's a lot of people looking for work still. And so you can get labor less expensively. You can get materials fairly reasonably still. And you can build for a reasonable price per square foot. And then that property is immediately, when it's done, is worth far more than what you've paid to build it. And then you can rent it out. And yeah, your numbers may, break even on a spreadsheet. But if you account for maintenance being far less of an expense in your first 10 years and capital expenses being far less of an expense in your first 10 years because it's brand new, then you actually are putting some cash flow in your pocket with a brand new property in some markets. But on the flip side, you can make the same margins in terms of profitability, sometimes even better margins in terms of profitability, depending on what you build. And you can build processes into new construction that's a little easier to build into than it is for a fix and flipper. So like in my market, one trend is people are building for about $125 a square foot, and you can build a single family home and you can sell that for $250 to $300 a square foot.
Wow.
Or you can build a duplex and sell it for substantially more. I can build a duplex for $125 a square foot and turn around and sell that thing for $400,000. The duplexes are flying off the shelves in multifamilies. And so the returns on building a duplex are far greater than a fix and flip that I would do or a single family home build.
So you're saying, Henry, when you're talking about the break even, that's if you build it and hold on to it. But you're saying if you build it and just sell it, then you can earn as good profits as a flip with, I don't know, I'd ask you guys, it sounds like a lot of times new construction is just easier than flipping.
Yeah, we're finding out because I'm doing my first ones right now.
It's Henry's FAFO time with, with new construction.
But from the people I know that are doing it, especially if you can get the land cheap, the returns are tremendous. And so I'm building, my new constructions are on lots that I've gotten basically for free. And so those returns are tremendous.
It seems like a great opportunity. But James, you've said almost the opposite to me about the Seattle area, that you think flipping has better returns than new construction. Does that just come down to the land price?
Well, it comes down to a couple things. A, land price, and then B, time to get permits in jurisdictions, right? Like, Henry, how long does it take you to get a building permit on a flat lot where you are?
About a month.
A month. It can take us a year to get townhome permits or longer.
Yeah.
And so the debt cost will just erode the deal. And that's what's been happening. Building is more systematic, but I can tell you our returns on building are a fraction of what we're getting on an annualized basis with flipping.
It makes sense that what Henry's saying, though. I'm guessing a lot of areas in the Southeast, which just generally speaking as a broad stroke, have easier building conditions than, in major metro areas, especially on the West Coast. So that seems like a really good option for people to consider. Henry, like what learning process are you having to go through to do this for your first time? And should we be filming it so
It's a good one.
so we can watch
First
it?
of all, I am filming it. I'm doing a whole series on my Instagram, on my Instagram about it. And it is titled "What I Would Answer This Question." I am building my first new construction home, and I have no idea what I'm doing. And so, what I'm learning so far is that it's the pre-construction steps that are the most tedious and costly.
But is that because you've only gotten to the pre-construction stage? Are you going to say that once you get to construction?
Well, we'll see once I get to construction. But we've really already got all of the construction lined out. Like, I know who my subs are going to be. I know what work they need to do. It's going to be fairly quick to get them in there to bid it and get started. What's challenging is, like, I've got one property. I know what house I want to build, but I can't send that plan to the bank until we get a septic design done by the septic design company. And based on what they determine where the tank has to go, that will determine what size of home I can build, because where the tank goes depends on what size tank you can put in, and what size tank you can put in determines what size house you can build. And so I don't know what I'm going to be able to build or what my returns will be until they've done the design, and I have to get them out there, do the design, and pay for all that before I can even get a loan from the bank. So it can be costly, and it can be time consuming because I'm on their time schedule. If they're 3 months out, well, then that's what I have to wait.
Oh man, if you're in California and there's an oak tree anywhere near that septic, you're going to have a lot harder time.
Yeah, it's crazy.
Yeah, and that's the thing. Building, in theory, is more systematic. You can get a copy of plans, you get quotes, you're dealing with a little bit more professional trades. But there's the other things that are such a pain in the butt. Like, for example, I'm looking at building a DADU right now. We've been going through this. We have a root setback from the neighbor's tree now that's like 20 feet. And so we can't build because the neighbor has a tree. And now,
that's the most West Coast crap I've ever heard in my life right there.
Those are the things you have to check out, though, before building, because it can be detrimental if you buy the long lot.
Yeah. All right, cool. Well, great strategy. Good trend. Thanks for bringing this one to us. Let's move on. James, what are you seeing in your market?
I'm seeing a lot more off-market deals. Seller settlement has changed. Inventory has gone up quite a bit, and hold times are really, really racking up. I think the average days on market is like over 55 days on market nationally now. And in a lot of our neighborhoods, it can be even longer. And as people are seeing inventory stack up and things not trading, man, my phone is ringing with off-market properties.
Really?
Like unheard of amount of phone calls right now. And people are definitely willing to listen to logic and not just be like, I want my price and move on. And so that has been really on the increase. I would say my off-market lead flow has increased by probably 300-400% this month.
And so it sounds like, though, it's not just quantity, but the quality of them is getting better as well.
You still got to dig through a lot of stuff.
No, okay.
But I think, like one thing that we pride ourselves on is on an off-market deal, we really do consider we're paying market value for the present condition. We pull all the as-is comps back off the commissions, look at the upgrades versus the non-upgrades, and then we submit our price based on logic. And that's been helping convert quite a bit, because it's just saying, hey, look, the market's slow. This house took this long to sell. We're going to close in a week for you. And not only that, you're going to make the same as what that seller just did and had to go on a market and sit on it. And so people have been a lot more open to logic before, whereas it was just they want their price before. And most importantly, we're seeing off-market sellers open to different types of financing on their deals, because the debt on flips is really beating up the returns, right? When you're holding a house an additional 3 months, the hard money cost is real and it will kill your deal. And so we've been talking to sellers like, hey, if you want a little bit higher price, will you carry a note and do owner financing? And if you can reduce that debt cost, it makes it easier on you as a flipper, and the sellers get what they want.
So does that mean you're going to be buying more?
Oh, I'm always buying. It's just, we've increased our margin returns, it's a risk in the market, but this is the best time to buy, because I talk about this all the time, is like when everyone's a little freaked out, there's not a lot of competition. Less buyers, better deals. And so we are definitely still buying. I'm looking for 4 more in Washington for the show too. It's like heavy fixers we want. And get creative with your financing. Like we're talking to people about, carrying notes. Like some seller just offered us a 4% rate on a 90% finance contract because they owned it outright. And that put about $65,000 more in the deal that way with not having the hard money cost.
All right, cool. Well, any advice to our audience, like how they might take advantage of this trend?
One of the best things that we've been doing is just networking with brokers too, because brokers also know what's going on with the market and they're educating their clients. Because, our job as real estate professionals is to educate the client on pricing strategy, what's going on in the market, how long things are taking to take. And because you have that person reaching out and working with an existing client, they can educate them on how your offer is solid. And then don't overpay just because it's off market. So just don't get the deal goggles.
Oh, man, I am out here making offers to wholesalers and they're like, man, your offer is the lowest offer out of 10 different people. And I'm like, yeah, exactly.
Yeah.
But also your market's doing a little better, right? You got to know your market. Like, I mean, Henry, you were just saying you're selling everything right off the shelf, right?
Yeah, it's selling pretty quick. But that sounds better than it is. We are aggressive with our pricing strategy, meaning I am not shooting for the top ARVs anymore. I'm shooting for the low end of the ARV scale. And then we're listing it cheaper than all of our competition on purpose. And so I may have underwritten it at 20 grand higher on my sale price. But when I went to list it, I didn't list it with that 20 grand padded in there because maybe I had a comp that was listed for less. And I would much rather get all of the eyeballs and get multiple offers in a shorter period of time than trying to get that extra 5, 10, 20 grand and limit my eyeballs.
Yeah. And so in that market, Henry's getting a little bit of juice, a little bit of speed. So there's less cancels, there's less expired. We've also I've seen a lot of people getting deals off cancels and expired listings, which did not happen before because people just wanted the high price. That's why they canceled. There's so many more cancels. And that's important when you're evaluating properties now to purchase. Don't just look at pendings. Don't just look at actives. Don't look just at solds. Look at what's canceling and expiring around you because that might tell you a totally different perception of what's going on in that market. But I've seen sellers sell like 200 grand off their canceled price too. It's like people are ready to move.
Shoot your shot, folks.
All right. Kathy, you're up. What are you seeing?
Oh, Dave, I'm seeing so many things. Where do I start?
Good things, bad things? What do you got?
We are seeing most investors wanting to buy property in Texas. And maybe that's because it's still strong. It's still a strong market. Prices are pretty low and builders are having a tough time selling. So we're able to negotiate those prices down. We also just refied our rental fund in Texas. And same thing, we're able to take that money and buy a lot of brand new homes at incredible deals. So that's one trend. We also have subdivisions. We syndicate from Oregon all the way to Florida. So I have kind of an inside view on the sales side, not so much the buy side on that. And in our Florida property, again, very surprising. We have that Mirada property just north of Tampa. It was 4,000 lots. This year we sold like 400 homes. It is the top 6th fastest growing subdivision in the U.S. And just in June, there were 69 sales. So that one is doing great. And then we've got one in Bozeman that has been great and it's slowed down. I can't tell you why. It's still pretty affordable compared to other homes in the Bozeman area. So I can't say that it's because they're too expensive. But then in the Oregon subdivision that we, just launched last year, we have a lot of buyers who want to buy, but they can't sell their home. So that's kind of an interesting thing that I hadn't seen for a while.
Interesting.
So they want to buy and they want to put that offer in, but it would be contingent. And they're just not able to sell. So again, like lots of trends going on here in Malibu. If you ever wanted to live here, it is on sale. Nothing is selling.
Really?
I imagine it has to do with the fires and, of course, the fact that you probably can't get insurance. But just details.
Yeah.
But it's crazy. A house, like I said this before, just with sweeping views, 3 bedrooms overlooking the ocean just went for 1.4 or something. Like
What?
cheap. Yes. For
Seriously?
yes.
You got to let me know about these things. I'm not moving there, but I'd like to dream about it.
Yeah.
Wow. Interesting. So it's like a mixed bag, really, what you're saying. It seems like.
Definitely a mixed bag. And so I think the bottom line here is to know your market. But these are two different, our subdivisions are selling to home buyers. They, just people who want to own a home. They're not rentals. But on the rental side, again, the majority of investors, and I consider our investors pretty educated and experienced, and they are just, again, flocking to Dallas, but also Cleveland because the numbers really work there. Indianapolis, you can still get cash flow. So, yeah, that's what we're seeing there.
Kathy, in Texas, have you seen the insurance rise kind of like level out there as far as costs go? Or do you think people are also going towards new construction because the insurance costs a little lower?
Yeah, we haven't had issues. And even in Florida, we really haven't seen issues with insurance as much as people talk about it because a lot of at least the ones that Rich and I bought and that a lot of people have bought through us are new. And so insurance is kind of not bad, and neither are property taxes. But it's terrible in California. It's really bad. Rich was just saying to me this morning, a rental property we have here went from $3,000 a year to $17,000 in insurance.
Oh my God.
And the costs that they're making in some of those states are going up pretty dramatically too, because I'm doing that renovation in Newport Beach and I'm below the minimum threshold for construction on my permit, but they're still trying to make me sprinkler the house. And I'm like, wait, what are we talking about here? And it's just because of the fires and the things that are causing the insurance to spike. It's hitting you on your construction budgets too.
Yeah, but on our Florida one, I think our insurance went up 5%. So like nothing unusual.
But had it gone up more in previous years?
I'm not sure. I'm not the data one. I think it goes up.
No, I was just curious because maybe it is slowing down, but it had gone up a lot in the previous years.
So Kathy, on these bigger plats that you buy, because you guys buy some bigger stuff.
Yeah.
Because I know a trend I'm trying to watch for right now is builders selling in the middle of building or fully permitted sites. They want to dump their product off. Are you seeing that? Because that's what makes it a lot easier to build. Like what Henry was talking about, the beginning work is the hard work.
Yes.
But if the site's ready to build, those are some very good opportunities because they're quick, they're easy. You can get financing immediately on that deal. Are you seeing a lot more of that floating around? Because I've been tracking that. I'm not seeing it in Seattle. I've been looking for it. Are you seeing a lot of opportunities there? Because I think that's a huge opportunity nationwide.
Yeah, I mean, that's the opportunity we got with the Oregon land that we acquired. The builder just gave up after 10 years of trying to get it going. It's very hard, and certainly on the West Coast, as you said, to get projects off the ground. And we got it for an amazing price, like half what the lot's worth, and it's still been hard to sell those homes. Like I said, the buyers want the homes. They want the new home. They just can't sell the home that they have in order to free up the cash. But I haven't been looking, so it may be out there. We've been more interested in projects that are already almost finished or finished and don't have to do any work.
Are you in a state where they'll disclose who's pulled permits for new construction, James? Because that's probably where I'd start, is just start calling or mailing those people who've pulled permits and see if they want to dump the land before they build.
Yeah, we track all that. It's a matter of actually permits are at all-time lows being issued on townhome sites because land price has been so high, dirt has been so high, build costs are high. There's not a lot of people applying for permits for townhomes. There's going to be a serious gap in that in the next 12 to 24 months where we are. And so there's just not a lot of it.
I'd also check the agenda on the city planning meetings because a lot of these people are sometimes having to go and get approvals for the things that they're doing, especially the newer people. And so just seeing who's going to be on the agenda, you can make some calls. Man, that blew my mind. Someone did that to me with the project I was working on. They just pulled the agenda to the city planning meetings. It was a bank. And then they called me and they were like, hey, I see you're looking at X, Y, and Z. Do you need funding? You can probably do the same thing with people looking to build and maybe want to offload land.
Yeah, hard money lenders, you guys are great ways to find deals too. Because we have been reaching out to other competitive lenders locally to find out, do they have any investors that want to dump off their properties midstream because they're out of control costs or ground up? Hey, they got permits rolling out, their leverage high. Their lender might say, you know what, you have too many projects going on, we want more money down, and the builder can't do it. And so they're great deal sources for investors. Call your hard money lenders, whoever's financing you. Hey, do you know anybody who wants to get rid of their stuff? You will be surprised.
Title companies have the same thing. They're closing transactions. They know who the investors that are in there that are looking to sell off their portfolios because of problems they may be having. So call your title company and ask them if they know any builders that are selling and put you in contact.
That's great advice, Henry. Thank you, Kathy, for bringing us the story and for all the input. I'm going last, and I think this is probably going to surprise people, but the trend I am actually seeing right now is cash flow. I am starting to see deals on the market that are cash flowing better than I have in probably 3 or 4 years, at least in the Midwest where I've been looking at deals. I have a buy box set up with agents in a couple of different places. And I'd say in a normal week, I probably get like 3 that I would realistically take the time to analyze numbers on just because things aren't good right now. But the last couple of weeks, I've been getting like 10 or 12, like literally like 3 to 4 times more interesting deals. I haven't pulled the trigger on any of them, but like things are starting to get a lot more interesting in the little niche I like to operate in, like small multifamilies in inexpensive markets. And that is super encouraging to me. I think part of that is because prices are going down modestly. The other reason is there's just more inventory, so there's a better ability to negotiate. Third, rents are still growing, not gangbusters, but they're going up a little bit, and mortgage rates are coming down a little bit. And if you look at the combination of these things, it's not like amazing cash flow. This isn't like 5 years ago, but it's a trend. And I think like if we continue on this trajectory, at least to me, this gets a little bit exciting. I don't know if you guys are seeing this in any of your markets, but in the Midwest, that is definitely starting to emerge.
What kind of cash flow are you seeing in the Midwest, like return-wise?
Like if you buy it on market and just put minimalized effort into stabilize it, you could still get like 3-4% cash on cash returns doing almost no work. If you actually go and stabilize it, like you can get 8-12% cash on cash returns.
Yeah, that's good.
Yeah.
Yeah, the deal flow is definitely kicking up.
Yeah.
The margins get better when there's more stuff for sale. That's for sure.
My hypothesis about this is that for the last 5 years, like we've seen 2 to 4 units has been so crowded, partially because on Bigger Pockets, all we talked about is house hacking because it's legit a good idea. And so we've had a lot of people who want to own or occupy, and they're willing to pay more than investors.
Yep.
But I think the people who are trying to house hack and own or occupy, that amount of people is going down. And so we're starting to see the 2 to 4 unit inventory. The sellers have to cater to people who are putting 25% down. They can't cater to the people who are putting 5% down and just need to reduce their cash flow. So the pricing is having to adjust for where the demand is for this asset class. And that is beneficial for people who are not trying to own or occupy these things like I am.
The rental market is definitely picking up because actually I put a house up for rent that I had up 12 months ago, and it took me 60 days to fill this thing. It was like dead. And we put it up, tenants moving out in 60 days. And I've had like 30 inquiries on this property.
Really? Wow.
Like put it up for rent last time. I'm like, I don't understand. I barely bumped my rents. I renovated it, made it nicer, and I'm not even getting interest. It doesn't make any sense. But now I do feel like rents are going to pop because the people are not buying. So where are they going? And then the people that do own have high rates or high bases. They got to cover.
Yeah.
And so it's just naturally forcing it up.
That is encouraging. I think this is one of the things we've talked about on this show, on the other Bigger Pockets shows, is like one of the impacts of market conditions is, I think, maybe not this year, but as we head into 2026, rent growth is going to pick up and vacancies are going to start trending down. I think that's probably true in multifamily, single family, small multifamily. And that is an encouraging sign. It gives me personally more motivation to buy, even if you buy one of these stabilized deals at 3-4%, or you could do a renovation, do 8-10%, then rents are going to grow. That turns a deal that looks pretty good today into like a really solid deal in a year or two from now.
Yeah, and then also if you just look at trends, I personally think the Fed has a lot to do with those trends. Of course, they're following trends, but when we know that they're going most likely into a rate cutting cycle, it may not happen right away, but eventually that works as a stimulus because money becomes cheaper to borrow, more people can borrow. And like you said, Dave, every inch we move closer to affordability, more people can come off the sidelines. If prices are stabilizing, if they're not going up as quickly, or even in some areas going down, and then you see interest rates come down a little bit, mortgage rates come down a little bit, you've just got a few thousand people, maybe a few million off the sidelines. So it's important to pay attention. And we're going into that cycle of, it looks like, lowering rates.
I hope you're right. I'm not convinced.
We shall see.
I got to know, what is your buy box? At 3% cash on cash can't be it.
No. I was just saying you could buy it like a stabilized asset for that, just as an example.
Yeah,
No,
no
like
worries.
I'm still trying to do renovations for them. I'm trying to buy them at that rate, renovate them, and then get them to that 8-12% cash on cash return is what I'm looking for. But the renovations are pretty much cosmetic. Like I'm not trying to do anything super serious on these. And you're able to find those deals. The way I've been doing it though is I'm not looking for vacant 2 to 4 units. I'm trying to find these deals that are going to cash flow. When people move out, I renovate them, I boost rent. So it might take me a year and a half or so to get it to that 8 to 10% cash on cash return. But for me, I'm fine with that.
Okay, so performa's 8 to 12.
Yeah.
And so like as you get, like I know as I'm getting more and more calls on deals too, I'm like, my return's slowly going up too. Cause I'm like, if there's this much inventory floating around, I want a better deal. Like, does it, like I feel like I raise my return every like 2 weeks. I'm like, not over this. It's starting to freak me out.
Yeah, because you're worried about downside risk. So you have to have the bigger upside.
Yeah, just to, hedge against. And, again, if there's more inventory, you get a better deal.
Yeah, I do. I think in these markets, they're still pretty solid. Like prices are still going up and inventory is not as crazy. But yeah, I do think that makes a lot of sense. I haven't pulled the trigger on any of them, but I don't think I'd take a perform of 8% right now, probably 10 to 12 or maybe a little bit higher. That's probably right. Maybe I should listen to James right now.
I think I need to listen to you and go buy some houses out in the Midwest.
Buy some cheap stuff, man, and just get a lot of cash flow. It's great.
I will go half on one with you.
All right, let's do it. I'll go find one.
I want to be passive this time. I'm going to throw half up and you can handle my Midwest.
Okay, great. Well, this was a lot of fun, as usual. Thank you guys so much for talking about these trends. Let us know what you're seeing in your market. If you're watching this on YouTube or listening on Spotify where you can comment about it, let us know what you're seeing. We'd love to hear what's happening in your market. Clearly, as we're seeing from this conversation, Kathy in her multiple markets, James in an expensive market, Henry in a fast growing, but a little bit more open to building kind of market, me in the Midwest. We're seeing a lot of different stuff going on right now. And that's why we're bringing you this information, because how you adjust your strategy is really going to depend on who you are and where you're operating. So let us know what you're seeing. Thank you, James, Kathy, and Henry for being here. We appreciate it. And thank you all so much for listening to this episode of On the Market. We'll see you next time.